So those of you who are still at the back, there are a few more spaces down the front and there will be more people piling in. So there's 2 here.
All right, are we on? Might as well get the show underway. G'day, Curtis. Fancy seeing you here, right at the front. Good job. Okay, welcome everyone. My name is Scott Glue. I'm one of the organisers at Morning Startup. This is
Dave Newman. I'm also one of the organisers. We have been doing this now since late 2011, 2012.
Yep.
You 2012, 2011, me 2012.
Every 2 weeks, rain, hail or shine. We've got an event here at Riff. Put up at a cool talk, speaker or something for Startup World Perth. So if you're in startup land, you're starting to think of a company or get something underway, hopefully there's something here for you or interesting people that you can connect with. So,
yes. So as we mentioned, we do have a format for this this show. We've got 6,500 members, and part of the whole point of Morning Startup is to connect you. And so there have been some great companies created in this particular space in Riff. And we have this little thing where it's a shameless plug and shout out. And so I know there are a lot of new faces here. So if you've done this before, I'm going to put you to the side and go, we're going to call out the new ones. If you're brave enough, stand up, share what you're working on, and most importantly, have an ask. What is it that we as the community can help you with? So we know who the newbies are, so we will point. Who's brave enough to stand up? I had one gentleman, you didn't resist. Go on.
Love it.
Anindya Banerjee. I recently moved here from Singapore. I work for a Singapore-based startup called Stemly.ai. It's a decision intelligence platform. We work in supply chain and finance. We're looking at things like how to reduce the amount of wastage in groceries and fresh retail. A couple of companies in Singapore. And also quite a lot of work going on in cash flow forecasting. A lot of AI, mainly around time series forecasting using deep learning, machine learning, and good old statistical techniques.
Have you got an ask?
Yeah, I'm new here, so mostly to meet new people. Anybody interested in this kind of things, please come and talk to me. We are hiring, so yeah.
Fantastic. And what's the company called one more time?
Stemly.
Stemly.
STEMLY, Stemly.ai.
Stemly.ai. Awesome.
Hey everyone, I'm Danny. So I'm a co-founder and CEO of a company called Bella AI. So we're Antler's most recent portfolio company. So we just got the investment this week on Monday. Thank you. Thanks everyone. So we're building an outbound sales AI. So it does research on your target companies and the prospects. And unveils insights and sends individualized communications on LinkedIn, email, and through cold call guidance as well. So that's us. My ask is, I'm new here, so interested in meeting with people, anyone that's interested in potentially using our software as well to help you sell. And of course, we're looking to raise another round in August, September.
Okay, perfect. Is anyone here not doing anything in AI?
Yeah.
Well, I'm the wrong person then.
Hopefully not.
I'm the wrong person to ask here. I'm also new here. This is my first time being at the Morning Startup. I've started with my colleague an AI company. We're called AI Advancements. We started about 5 months ago, and we help businesses understand how they can use their data and what they can do and how we can integrate AI into their business. So we're a consulting contracting firm. And so we do full stack development as well. So we build web applications, mobile applications, or even just cloud services using AI. So we make customized solutions for companies. So I guess my ask is, if you are looking for AI and you need help building that, we're a consulting firm that does that.
Where do they go?
Sorry?
Website or something?
We have a website, or just come approach me and I'll give you a business card or connect with me.
All right, thank you.
Anybody not working in AI? I was just thinking there, it's like we've been doing this long enough now that you remember the Web 2.0, you then remember everyone standing up, they've got a crypto or some sort of thing like that. Anybody else brave enough? There we go.
Hi, my name is Kate Sparovich. I work in the film industry, so very threatened right now by AI, but also very excited by the possibilities of what can come from it. we're looking at how we can bring new technologies into what our company is doing, and making traditional storytelling in an exciting space.
Do you have an ask?
Actually. We've got so we're financing for a feature film at the moment, so if anyone's interested in seeing how movie sets work, we've raised 2.2 million. We've got our last 750,000 that we need to raise. Wow. So close, and we've got to do it in like a month and a half, so otherwise we lose it all.
Wow, okay.
Okay, cool.
Good luck.
Anyone else? It's actually an interesting space. Who's heard of, is it Sora? Anyone heard of Sora? Yeah, super interesting. The latest ChatGPT or OpenAI thing around it. If you haven't, go and Google it. The quality is unbelievable. Anybody else that's not been here before that wants to give a shout out? Sorry?
I'm not new, but I want to say...
You want to do a shout out?
Yeah.
Oh, we can't hear you back there. Well, that's if you move forwards, you might be able to hear.
All right, we've got one more here.
Yeah. My name is Jacek. I'm representing my company, Spectrum Lab IO. And I'm not very new because I'm attending this 2 years here, but I have one announcement. The company from Ukraine contacted me, they are developers, Web3, AI, so they could deep coding as well. And they said they got more than 60 people working, not outsourcing. They spread around the world because the Ukraine got small problem now. And they said, if you need some coders, ask me, or I can redirect you. I don't want to be the middleman, but I want to help them and direct them. Redirect you if you need developers to them. Sorry. That's all. Thanks.
Thank you.
All right, thank you.
Perfect.
I know Curtis wants to do something. Can you keep it to 30 seconds?
Yeah, right.
We will time you.
Right, hardware guy, water security, food security, wheat belt. We're in a drought now. Cereal crop down from 26 million to 14 million. Livestock, the price of, sweet fuck all. And they're carting water for them now. They're in trouble now. It's my passion. It's what I'm doing. I'm on my way to Melbourne, raising capital from Japanese to do my green tech project here in WA. Thank you.
First time.
Nice one.
I think that
Good job.
deserves a round of applause.
Good luck in Melbourne. All right, let's move on. So we also have a Founder Sundowner event. It's the first Wednesday of every month at Nowhere Man Brewery. So that's next week, I believe. Come along and have a chat and drink and some pizza with some founders.
So I just want to make a big point, because the last time I said they pay for the beers, and it's not the beers, they pay for the pizzas. However, I think that's a great opportunity to say if there's any sponsors out there, because Scott and I do this completely for free, and it's all volunteered, and the stuff that you see is paid for by great people like Tekken and Ammo and Beecham and Keep Space. But if there is somebody out there who would like to sponsor beers, I'm sure you won't say no.
I'm sure a lot of founders would like to have their beers paid for.
Yeah.
Because I don't know if you've seen the prices at Nowhere Man, but geez, okay. Awesome. Now, we've got some awesome camera equipment up the back there. This is being live streamed to the regions, thanks to the Department of Science, Jobs, Tourism, Science and Innovation. Got to get that right. JITSI.
And specifically the New Industries Fund. So the great people here, Purpose, were one of the recipients of one of the campaigns or activities they were doing. It was the WAVES program, correct? Which helped kind of bring or keep 3 WA VCs or funds here. They also got the Innovator of the Year all the way through to the WA dealrib.co.co. I was on it the other week. Super interesting to go and have a look. If you haven't, go and check it out. Go and stalk a few companies. If your company's on there, make sure you go and update it so it's got the most recent information.
Yes. It's also the Innovation Booster Grants, so make sure you get around that. You can just apply and hopefully get $40,000 of semi-match funding from the government. perthvideo.com.au, doing the streaming if you need any streaming. Ammo Marketing, we got Jack here with the Cyber West Summit. Any big announcements?
Yeah, Cyber West Summit. So, I'm wearing this t-shirt.
Perfect. Get around the Cyber West Summit.
And if you haven't checked it out, check out the Ammo Marketing Weird Growth podcast, available on all good streaming services.
Yes. Beecham Group,
Glenn
not here.
has taken the banner. I know where the banner is. He took it for golfing.
Ah,
So they're searching
Fair
for
enough.
it, thinking
He's
it was
lost.
somewhere, but he's taken it for golfing. So thank you, Glenn. If you are looking for a boutique recruitment company, or you're looking to employ your next staff member, or you're looking for a job yourself, then check out Beecham and the team there. They've been big advocates of Morning Startup for many years.
and we've got some food at the back. If you haven't helped yourself already, we'll have half an hour of networking at the end of this to grab some food. And that's thanks to Keep Space. They do e-commerce stuff or logistics. So if you're in the e-commerce game, you need to ship stuff around the world. They've got a warehouse here in Perth and Melbourne. They've got a really cool platform around it to help you manage that whole process. So get around Keep Space. And thank you very much.
3PL,
3PL.
if you know what that means.
That acronym means something to you?
That's what
Hear
they
about
do.
Keep Space. All right, we got Matt here. Hey, there he is. So TechOn, they can help you with developers. We got a few people shouting out for developers today. They have an awesome team based in Nepal. They can help you with your React, your HTML, your AI, all of that stuff. Dave and I have used them for projects and things. So yeah, if you need help with developers. And they are also sponsoring our coffees. So head out to Joey's Uzz's and tell them you're at Morning Startup. TechOn's got the bill. Thank you very much.
Thank you, Ticker.
And
Last but not least,
lovely
we couldn't
companies.
do this without the great people at Spacecubed. If you haven't know what Spacecubed is, the company, they have this place, Riff, they have Fern a little bit further along, they then have Flux right at the M191, and now they have a few other places, but they now have the Western Sydney Startup Hub, where I'll be on Friday, which is again another awesome location. So if you are, generally the way they work is amazing. They help companies like ourselves grow and just keep moving up until you get to a space where you actually need your own home. So if you haven't checked out Spacecubed, the team, check them out. Startup news every Friday. If you haven't subscribed, make sure you subscribe every week. Great bit of nugget of information that comes out.
Startup WA. Is anyone from Startup WA here? Nope. Go and subscribe to Startup WA. They're sort of our body for lobbying to state government about what we need here as entrepreneurs in Perth. So they've got at least a very good newsletter, and they do events and everything, so get around it, subscribe. Oh yeah, the Pulse event. Yeah, that's great. So 3-minute pictures of from the startup ecosystem.
Cannot forget +8. So we've got Kirsty here, who will also be in a couple of weeks. Is it 2 weeks' time? Or is it 2
Oh
weeks'
yeah,
time?
yeah, 2 weeks' time.
2 weeks'
We've got
time, we'll
Marcus
have
and
+8
Kirsty
explained.
again.
So if you are got a company you want to go through an accelerator, they work. I'm evidence that they haven't. And so basically, if you want to go through +8, then obviously check out. They'll be here. When does boot camp or that? When do the applications close?
Applications close end of April for bootcamp on the 18th and 19th of April.
And how do people find more
5th of
information?
April.
And where do people find more information?
On the plus8.com website, and yeah, get your applications in. We're looking forward to seeing the applications coming in.
Brilliant.
All right. And for the live stream, if you didn't hear that, it was the 5th of April to get your applications in. Yeah, cool.
Excellent. And last but not least, TechBoard. If you haven't claimed a profile, pop along to TechBoard and claim it.
Beautiful. All right. So I just want to put a shout out. We're terrible at social media. I might do an Instagram story or something on this, but if that makes it to LinkedIn, it's just luck, if I have enough time in the day later on. So if you can, take photos, tell everyone you're here, tag us. We're Morning Startup on all the things. We'd love to see them up there. Also, if you want to do a talk or something, get in touch. We really love to hear from you. As we just mentioned, this is coming up in 2 weeks' time. We've got the great Dr. Marcus Tan, who's the new entrepreneur in residence at the +8 program, and Kirsty Packer, who's the program lead, and they're going to be telling you all about it. So come along in 2 weeks' time. It's going to be bigger than ever. And that's formalities out of the way. Boom.
Come on, I thought it was going to be a bigger order. We've got at least one. We've got one laugh down here.
All right, cool. I think that's enough from us. Let's hand over to the main gig. So we've got Derek, Kylie, we've got Lachlan here, and we've got Kirsty from the Purpose Ventures team. They're Perth's largest VC, right?
And I can't tell you, having been through the process with Derek, this is something I probably should have had this, and Derek will laugh, I probably should have gone and watched this meeting prior to going through with Purpose. So I look forward to hearing all the information. Yeah, what I should have done. So.
Right, so you guys are going to get the edge, and if they gave Dave money, then they'll give you money too. All right, cool. Thanks very much. Let's hand over to you guys.
Awesome, thank you. I might. Can you do that? And I'll.
Yeah.
Just while Scott's doing that. Morning, everyone. Thanks for coming out early. Before I launch into this, a couple of things that you need to know. Number one, we invest in AI companies. So if you're looking for money, let us know. Yeah, good. I'll just check. Good. Right. We have a dinner that we ran last year, which we call the Entrepreneurs Dinner, which has actually been funded by Jetsy, or part funded by Jetsy. And last year when we advertised that, it sold out in 24 hours. In fact, there's some people in the room here today that came to that particular dinner. The whole point is hearing similar content to this, but a bit more detail. And we also have a panel of founders that have raised capital. So we have John Constantinopoulos from Artria, Kath Giles from Oncares, and Daniel Dawson from Paperly, and they kind of share their experience. We're going to publish that event today. But if you're interested in coming, I think it's more about the content, but also you get a $150 dinner for $30. So I'm not sure whether people come because of the cheap dinner or because of the content. But anyway, either way, come along. But I'm just letting you know it sells out in less than 24 hours, so keep an eye out for that if it comes out today. And then the final thing before we jump into this, I always like to give a shout out to Scott and Dave, because as they said, these guys have been doing this for 12, 13, 14 years. As far as I'm aware, it's the longest standing startup event in Western Australia. And they're here, rain, hail or shine, every Wednesday morning, and they're also running their own companies at the same time. So I think, I'm not sure where they've run off to, probably back to business, but definitely think we should, there we go, give these guys a clap. Thanks. Okay. So, two things. We're going to shamelessly promote our fund. Kylie will get up later and explain what it's all about and how you get access to funding. But obviously the content is how you get venture ready, whether you're coming to us or others, and that's where we'll start. So, they have been mentioned, but the team, so Kylie will jump up, you'll see her. Kirsty, where are you, Kirsty? Somewhere. Oh, she's very little. There she is, right at the back. And it's cool because Kylie and I have been running the Plus 8 Accelerator for the last 5 years. We've obviously had to hand that over because of running the fund, but as we saw, Marcus Tan's the new EIR and Kirsty's running the fund as well. So, and then next to Kirsty's Lockie. So if you've got questions, and you can ask any of us, we'll be able to answer the questions for you if anything comes out of that from today. I have been in tech for 25 plus years. I won't bore you with all the details. The point I wanted to make is the reason I'm comfortable standing up here and telling you how you should raise venture capital is I've probably raised more money in Perth than anyone else, and at the moment that sits at $86 million. We sold a company that I founded about 10 years ago, and Kyle and I, through different ventures, started investing in Perth tech companies. Some of those you'll know, obviously Health Engine's a great one, Isotana and others. And through Go Capital, then through to Better Labs, and now the Purpose Ventures funds are up to $86 million that's been deployed. I don't think anyone else has done that. So what I'm trying to do is in about 15, 20 minutes, condense all of that to say, hey, this is what you need to think about if you're raising money. I've also been a founder and raised capital, so I've sat in that seat as well. The first thing, if you only remember one thing, I know some people have seen this presentation before, if there's only one thing that you remember from everything I say this morning, and that is not all money is good money. Just because someone's offering you a check doesn't mean that is the money you should take. At the end of the day, when you're an entrepreneur, you always feel like I'm going to run out of money, I've got to raise next money, how do I do that? And often it's easy to take the first money that's offered to you. And I've seen way, way too many stories where that one decision sends you on a tangent with your business that you didn't realise, and you've taken that, but actually it's the wrong terms, it's not alignment with your investor, and it literally, this business that you're so passionate about and you love and care actually doesn't make it because of that one investment decision. Now, at the end of today, I'm going to give you a couple of questions that I think you could ask your investors to do due diligence on them. Sometimes you feel as a founder, all the power sits with the investor, and it's actually not true. We have to fight and compete for deals and things, and so you can be selective in the money that you take. And I'd just say be careful that you don't take the wrong type of money or the wrong investment structure, and we'll have time for questions if you want to ask more about that. So when might you need funding? I mean, I think, if there's lots of founders in the room today, you probably know the answer to this question, which is I'm about to run out and I need that money. Or one of the ways we like to think about it is it's almost like the fuel in the car. It's like you don't want to run out, but you also don't want too much. So you just need the right amount of fuel to get to the next place that you're going, the next milestone. Obviously, the running out of money is the obvious one. That's what you feel. But I've been involved with companies that have actually raised too much money as well. And that actually, what happens is you spend that money, you maybe hire too many staff and things like that. And what happens is you don't learn the lessons of being a lean startup and actually focusing on the right things. You just start doing a lot of things, and it means you kind of lose some of the learnings of right price, right business model, all those type of things. But from a venture capital perspective, the reason I put this slide up is venture tends to come in a little bit later in your funding journey. We will come in a pre-seed round, and Kylie will explain what that means a little bit later. But typically, if you've got to get money to get to a point, you might find your early money is coming from, you might have heard the saying, friends, family and fools. You might be aware of angel investors. They're all different types of funding that you could think about. Of course, your own money is really important. Nothing signals to us that there's a great company to invest in than you putting your own money into your company. But from a venture perspective, we're just looking for a little bit of de-risking. So typically, we're not going to back an idea. So if you're like, I've got this great idea, it's the next $1 billion idea, would you help me build a prototype? It's like, we're not that kind of money. That's probably your money, or maybe a friend or family or something like that. So we're typically wanting to see some level of product development or research that's progressed to a point that you can get at the start of that commercialization journey. And if you're a software product, to be honest, we're pretty much waiting till you've got revenue. There's some deeper tech that you're going to need our money to bring product to market. So we've invested in a company called GNS that some people might know, just seen over there. Yep, it's a Seri company. They went through Seri, and they're pre-revenue, but they needed help bringing their product to market, and we felt that we were a good partner for that, but they don't have revenue. The other 3 companies that we've invested in already revenue generating, and our money is about going, okay, there's still some things in your business model or your way of operating or your pricing you haven't figured out, and so the money's helping them with that, as well as then starting to help them scale. And so that's where venture capital fits. Now, you've probably been looking at the slide, you can figure out, roughly where you might be on that trajectory in terms of when's the right time to approach venture capital. Now, one of the things to think about, and I think founders often forget this, is from the moment you decide you want to raise money, you need to think it's a 6-month runway. And too often we see people come as founders and go, ready to raise money, and I'm running out of money in 5 weeks. What you've just done is put all the power into the venture fund. Like, we'll just typically, if that's the story, we'll just sit back and wait and see what you do and how do you respond when things get really tough. And it's almost like, well, you haven't actually managed your runway very well, so if we give you money, what are you going to do with our money? Like, probably the other main takeaway, apart from not all money is good money, is everything you do is a signal. It's actually my last point, which is due diligence is always on. So everything you do, we're thinking about, what does that mean if we invest in your company? So if you suddenly go, I've run out of money, I need your money, you're basically saying, I'm not good at managing money, right? So you've got to think about all the signals that you're giving as a founder. And you can see the time frame up here. By the time you create your pitch deck, then you think about who we're going to target. When I raised money for my startup, I talked to 42 investors before we raised money from 1. And I reckon that's pretty typical of the odds that you need to think about. So you've got to figure out, how am I going to get myself in front of 40 or 50 investors? I've got to reach out, I've got to set up the meetings, I've got to go and have those meetings. Then when you eventually find 2 or 3 or 4 investors that are interested, they're going to have a due diligence process. That can take a couple of months itself. And then you start negotiating terms. And when you've negotiated terms, then the lawyers get involved and you prepare all the closing documents. And then eventually you get the money in the bank. Now, we've turned some deals around in less than, I'd say, like maybe 6 weeks, 7 weeks, which is pretty quick. But from your perspective, I'm just making sure that you realise how long it really takes, and you're giving yourself the best chance of runway. Now, then what do you do? Like, okay, so I get in front of an investor. What should I be talking to them about? Just a quick, obviously we all talk about pitch decks and pitching and things like that. What happens in things like pitch competitions and accelerators? You get taught really, really well how to pitch in 5 minutes. Then you've got to go and sit in front of an investor, and you're probably going to have an hour conversation. And people don't plan as well the hour conversation as they do the 5-minute pitch. Likewise, in your pitch deck, in my view, there's 2 types of pitch deck. There's one which is a presentation style. Right, you'll notice in my slides, there's not many words, right? I'm just talking to you. I've got my key points up there. I'm thinking visually, how can I enhance the story that I'm trying to tell you? That's a presentation version of a pitch deck. So if you're doing something like going through the +8 accelerator, we'll get you to do a pitch deck that's really good for standing up in a group of people. If you send that pitch deck, and I'm reading as an investor, I don't have enough information to understand whether I'm actually wanting to progress a conversation. So you need a second version, which is the one that's got a lot more detail that explains the things that you'd normally do, right? Now, I thought this was an interesting chart that I've seen before. This kind of says, hey, let's look at a bunch of the world's biggest funds and accelerators and see what they recommend should be in your pitch deck, and then you can see through the dots which are the most consistent slides. I kind of agree. I think you only need max 10 slides if you're presenting, and those pink dots are the ones that I'd focus on. The other two I think are worth adding, for what it's worth, is the traction milestones one. I'm surprised that wasn't for everyone. Like, we're really looking for the evidence that you've got a business here with a customer that's prepared to pay you to solve the problem that they've got. And the only way you do that is through traction. So I think you need to talk about traction. And then the final one there is the use of funds. If you're saying I'm raising $1 million, we kind of want to know how you're thinking about you'd spend that money. So I'd probably add those two to that list. Okay, now I think one of the best ways we can talk to you about how do you get VC ready is to let you know the reasons that we don't do deals. And by the way, big shout out to Lockie and our team. Lockie does all our illustrations for us, so all these cool pictures. And that one he did overnight, this unhappy founder that we got told. I don't know why he has a man bun and a hoodie, by the way, but you can ask Lockie about that. We do have a female version as well, but we ran out of time to get the female on there. So next time there'll be a new picture. Okay, so why do we pass on deals? So the first one is lack of founder commitment or equity. Now let me explain those two things. The commitment piece. Do you know the number of times we'll meet a founder who wants to take our money and has got this $1 billion idea, but they're not working full-time in the business? Now, if you're bootstrapping or doing something like that to get to the point of raising money, that's good, but we're not going to be the catalyst for you to take the risk to go into your business full-time. So you need to be going, I'm all in, this is the only thing I'm doing, I'm full-time, I've committed, I've found a way to make that work. So that's kind of one part of the equation. The second thing is sometimes people will say, look, I've got this company here, but I'm really entrepreneurial, so I've got this company over here, or I've got this company and it's got 3 subsidiaries and we're happy for you to invest in this subsidiary but not that one. And so there's all these kind of funky things that go on. And like, we're just simpletons at heart. We're looking for you to be running one company, doing one thing and doing it really, really well. And that's not to say being a multipreneur is a bad thing. There's lots of people that have, built many companies at the same time. And if that's who you are, that's great. But that's not the company we're going to back. From my perspective, for you to build a great company and get venture-style returns, it is really, really, really hard. And if you're like, oh, that's fine, but I'm going to work full-time hours, and then you've got a side hustle, I'm like, I want your side hustle time in the company I'm giving you money for as well. Right? And it might sound a bit ruthless, it's like, but that's what it looks like to deal with venture capital. So if you come in and literally, Kirsty and Lockie and Kylie can attest to this, and you sit in the meeting and we're 5 minutes in and I catch wind that you're doing something else, we'll just go, we're not going to invest and stop the meeting, and that's it. Like, it's that binary in terms of the people that we'll back, right? So
avoid the awkward moment. There's a tip.
Yeah. The second thing comes to equity, right? And when you're an early stage company, we're expecting that your cap table is pretty simple. It should be just you and your co-founders and maybe some employee equity. And if you've raised a little bit of money from an angel investor or a family friend, then they've probably got some equity as well. So the other reason that goes wrong is people kind of have these really convoluted founder vesting schedules and cap tables that have already got 45 people on, but you've only raised $500,000. And so we look at that, and ultimately we're saying our whole goal is to back you as a founder, back your story, back your dream. And we know that you're probably going to have to raise more money, and to be incentivized throughout that whole journey, you're going to need enough equity to make sure that as you dilute, by the end of that journey, you're still happy with the equity that you have in your company. Because if you don't, you'll just walk away from it. Now, I've literally got a company I'm talking to at the moment, and the founders at this stage only own 5% each of the company. And we won't back that company because I know they've got to raise more money, and by the time they own 2%, if it gets hard, they're going to walk away. And so one of the ways to think about that is this model of uninvestable cap tables. Now, because of time, I can't go into all the details, but these are the kind of things that we see. So that first scenario is that you've already given up too much equity before you've started, the scenario I just explained. The second scenario is that you did raise money, but that investor was a bit too aggressive, and now an investor who's not active in the business suddenly owns 50 or 60% of the company. We're not actually backing you as the founder, we're backing that investor who we won't necessarily have the relationship with. And so again, we kind of see that. So think about how much equity you give up. What's the next one? The debt equity. Okay, so this happens more often than you'd realise. The most common scenario I see here is that you've co-founded the company, you've had a breakup with your co-founder, you've got them out of the business, but they still have equity. Now, you might go, I got them down to 5% or something, and you feel like that's good, that's a minority position. But from my perspective, I know when I give you my $1 million and I put our team around your company and we grow your business, we're going to get you, in the next year, you're probably 3 or 4 times the value of your company. And by the time you exit, you might be worth 50 million or 100 million or 500 million. And that person that got equity at the start suddenly might walk away with $1 million check or a $2 million check for doing nothing. And I hate that. So if you come to us and we like your business and you've got debt equity, we will literally require you to deal with that before we invest. And there's already companies that we've invested in that have done that. So you talk to our portfolio, they can tell you what that journey's like. The final thing is that scenario of, hey, we've raised $1 million, but you've got 40 people on your cap table already. We don't like that. There's too many shareholders to deal with. That can cause all sorts of issues from decision making and things like that. And when we talk about equity, I thought it's just worth you seeing this chart. This is US data, but it's pretty accurate in Australia. Again, founders, you come to us and you don't think about this so much. You just go, I've got a feeling of, I just want to give away 10% of my company. So by virtue of feeling like that, you're like, I'm raising $500,000. You've just valued your company at $5 million without necessarily justifying how you're going to do that. We're quite happy to pay high valuations if you can provide a data-driven approach to how you value your business, and I'll touch on that in a second. But what you might not realise is that most investment rounds, you can see here, is circa 20% equity. That's sometimes up to 25%. So you need to get comfortable with how much equity an investor needs for it to make sense for them to put money into your business. And it's not 10%, which is the number we see all the time from a founder's perspective. We're going to be negotiating more closely to that 20% marker. Okay, second reason we pass on deals is people get obsessed with the solution and the product more than they do with the problem. The reality is, as a startup company, we're not actually expecting that you've probably built the right solution yet, or that you even understand what that journey is going to look like. So if you come in and your whole pitch is, we built this product, here's the product demo, this is all the features we've got, that's going to be less attractive to us than this is the problem that we care so much about, and we're going to do everything we can to solve that problem. I'd be quite happy and have been involved in companies where we rebuild the whole solution because we're obsessed with the problem. Just a side note, I hate the word features, because feature says to me you're just building more and more and more stuff because we can do it and we've got cool stuff we want to build. And in my company's journey, when we built our software product, at the end of that journey, I don't know the number, but I might say we could do 400 things. We had 400 features. But when I look back, there was one thing that all our customers consistently bought for. And so if I was building a company again, I would have just built that one thing and done it really, really well, and that makes scaling so much easier. So be more obsessed with the problem than you are with the solution. Next thing we pass on deals is what we describe as business hygiene. So our job, when we meet you, the way we think about it is we want to fall in love with you, we want to fall in love with your company and the problem that you're solving, and then we'll go into a due diligence process and we completely flip the way we think about it. We go, okay, we fall in love, now we want to find a reason not to invest, and we're going to dig and dig and dig and try and find a reason not to invest. And if we can't find a reason, then it's like, great, now we've got a company that we want to invest in. And that due diligence process, where it often falls down, they're actually basic things that we would call business hygiene. So again, we don't have time today to go through them, but it might be the cap table piece we talked about. You've got the wrong kind of investors. You might have debt on the balance sheet and it's the wrong kind of debt. You might have some funky terms in a shareholders agreement that you're not prepared to negotiate on. And the minute we find something like that, we'll just walk away. We've got, like Kyle explained a moment, we've already had 200 applications that we've looked at. There is lots of good deals for us to do, and if you make it too hard for us, we'll just walk away. So you can get your house in order before you present to us. That gives you a better chance of getting capital. Now, in some cases, it might be challenging to solve something that's going on from the history of your company. And we might help if we really like the company, but obviously to put your best foot forward, think about these things before you come to us. And then the final thing is unrealistic valuations. The best thing I can say about that is you've got to quantify your valuation. But the thing you need to realise is we have way more data than you do on the valuations that get actually paid for in companies. And so there's no point trying to convince us that it's higher than what we know your company's worth. And in the early days, I'd be actually less concerned about that and more so about bringing the right investor on the journey. And when you think about valuation, you need to think about the valuation in this market, in this geography, at this time. So if you go and raise money in the US 18 months ago and you're a fast growing company and you reached $1 million ARR, you could probably attract up to 20 times your annualised recurring revenue for the value of your company. That same company raising money in Western Australia today probably pays 2 to 3 times ARR. Now, if you don't like the multiples we pay in WA, that's fine, go east or go overseas. But just remember, those markets are more competitive and it's harder to get the capital and they probably expect you to move there and all those type of things. So, you know, we're not trying to be difficult, but you've got to think about the market that you're in and the investors that you're talking to. What we're not going to accept is, hey, here's this US valuation that just got done for a US equivalent company 3 weeks ago, so you should pay it. It's like we're going to say, no, you just go to the US. Like, it's like that. That's not the Western Australia market, okay? Now, again, this is a whole other topic in its own right. Very briefly, how do we think about valuations? There's 5 inputs. The first is you've made progress to date and we'll give you value for the milestones that you've reached. So have you got a product in market? We'll de-risk, that we add value. Have you got sales? We'll add value. Have you got a great team? We'll add value. Then we want to think about what's your future forecast. Now we know, by the way, your forecast is probably wrong. That's the point of being a startup. But at a point in time, we have to go, do we agree that's the trajectory that we're going to try and get on? And if we do, then we can actually apply some more traditional financial valuation metrics like DCF and net present value, and that gives us another data point. Then we've got another data point, which is comparatives. If you can come up with other companies that have raised money and figure out what they've been valued at, we can kind of look at that as a data point. Then you've got an equity position in mind that you'd like to give away. We've got an equity position in mind that we'd like to get, which we've already been through. And then finally, as a venture fund, we need to believe that every company we invest in, that one company could generate the returns for our entire fund. And venture investing is all about a portfolio approach. And the idea is that maybe 1 or 2 companies out of 10 are going to be the ones that return all of the money because the other ones will fail. So we've got to look at your business and go, can we literally 50x or 100x your company in valuation? And when we think about your model and how you're asking for valuation and that journey, does that all line up? So these are the kind of 5 data points that we're thinking about in valuation. Okay, final point before I hand over to Kylie, which is what I was saying. Due diligence is always on. Like everything you do as a founder is a signal. So I've already picked up the people that stood up this morning and I've thought about who's your company. And you were brave and you stood up really quickly, and I've thought about that. And then I've thought about how have you pitched your company. I've already locked that away. If you come up afterwards and say, hey, I've got this startup and I want to talk to you about raising capital, I'm thinking about how have you communicated with me? What was your body language like? What are the words that you use? Like everything we think about, like all we're doing at the end of the day, honestly, in venture capital is backing founders. And so everything revolves around how you operate, how good you are at what you do, how convinced you are by your story and that you're chasing your life cause and all these kind of things. And so that extends to all the stuff that we've talked about through today, the pitch deck that you send. Simple things like we literally say, does someone show up time to a pitch meeting? When you walk into our office and you meet Lockie, how did you treat Lockie? When you sit down and we offer you a drink, do you offer to take your glass out on the way out? Like these are just, they feel like simple little things, but they literally are all little signals of who you are as a founder, and we think about it a lot. And so you just kind of remember due diligence is always on. And final point when it comes to due diligence, as I said right at the start, the due diligence process is both ways. So you should do due diligence on your investor as much as they do on you. Now here's some questions I think you should ask your investors, because there's a lot of people in this game, and even in our city, that will stand up. For some reason, people think it's cool to run a venture fund. So they'll stand up and go, I've got a fund, or I've got capital, or something like that. And you need to assess really quickly whether they really do and whether you want to be aligned to that investor. And so you can ask some of these simple questions and it will give you clues pretty quickly as to whether it's the kind of investor that you want to deal with. From our point of view, we feel really comfortable with our answers to all of these questions. And, you know, I've been investing in WA for 10 years now, and I put up a slide of the companies I've invested in. I'm happy for you to go and talk to any one of those unsolicited, and I'm confident that they'll be pretty positive about the investment experience that I've been involved in. And so you can kind of do your own due diligence on that. Okay, I'm going to hand over to Kylie, who will tell you a little bit more about our fund, and then we'll have probably 10 minutes or so for questions at the end.
I need the thingy. Alrighty, good morning everyone. We're not typically morning people, so I have huge hats off for Scott and Dave that they do this every fortnight, but thank you for coming out early in the morning. So I'm just going to tell you a bit about our fund, and I'm going to start with the name because a lot of people wonder why are we called the Purpose Ventures Fund. And I think if I had to summarise it, we are about backing great founders, building innovative companies, but that are chasing after their life cause or their purpose. And does our purpose align to theirs? So we're not a social impact fund, but we are about aligning ourselves with the purpose that you're basically doing your company for. And one of the things I would say about that, and you could summarise it, know your why. So when you come in and meet with us, or even if I just in 1 minute ask you what your company is, know why you can explain that this is what you've chosen to do with your life. You could be doing anything. So know your why and learn how to articulate it really well. Okay, and who are we? So we are really excited because we've raised $46 million of funding, and that's all been from WA investors, which is a really great news story for you guys, because as part of that, we let them know that as a fund, we would at a minimum, put 70% of that money into WA founded or operated companies. We are wanting to change the local narrative about funding being available here. Kind of irrelevant for you as the founders, but we are an ESVCLP. This is essentially the structure of our fund. It has a whole lot of tax benefits for our investors. But one thing you do need to be aware of with that is at the time we invest in you, 50% of your assets and your employees need to be in Australia. Now, I'm just going to clarify on the employees for the purpose of that test. That includes any contractors you use as well. So a lot of people standing up with all of their AI, which is super exciting, but I know a lot of people also use offshore contractors. They will be included in that employee test. So just something to bear in mind. We're industry agnostic, so we will invest in the industry, but with a small carve out for health. And as Derek's already alluded to, so we do pre-seed through to Series B. We like to come in early. We want to go on the journey with you. Ideally, we'd like to be your first institutional check. And whilst we'll write from 500K up to 3 million, I wouldn't worry so much about what our minimum check size is. We'll contextualise that to your company and what makes sense for you relative to that fuel in the car. Really quick update, and I won't go through a whole lot of details, but we have received well over 200 applications since March last year, which is really exciting. About 65% of those have come from WA, and you can see we've already invested in 4 companies, and quite contrary to what is across the board, more of those have been female founders. So we're really proud. We look at that, we record that, and what I would also say I'm really proud of as a female is we've just done that on merit. That's not a quota-based thing. We've just had some amazing female founders that have approached us. They've all been WA companies, which we're also really proud of, and you can see there it's been from a real mix of sectors as well. Okay, what we fall in love with. So Derek's told you the reasons we're not going to potentially invest, but some of the things we're looking for. Like we've said, at the end of the day, we're investing in great people. Now, I'm not going to go through this because I've got about 5 minutes, but we do have a bit of a character competency and chemistry. And at the end of the day, you can't underestimate how much our interactions with you personally make a difference. Like, just be a good human in the way that you do life, the way you talk about your business, the way you interact with people. Every single thing makes a difference. Innovation. Now, sometimes people will assume innovation needs to be technology, and often it is. But it could also be something like a new business model or an operational efficiency. There's so many different ways that you can innovate. And once again, we just need to see that you're doing an incredible improvement in the industry that you're working in. The other thing that you need to be aware of is, now we're a 10-year fund. So we are not looking for you to literally get to Mars. Some people will say you have to be global from day one. That's not our view. You need to have large markets. So it's this context of being able to have the growth, the scalability that's going to make you venture backable. The other thing within there, just under the founders, that's really good for you to be aware of is there's 3 key things that we will look for in a founding team, and that's that you've got commercial skills, so you understand what it means to work commercially and the contracts interacting commercially. You've also got industry skills. We want you to understand the industry that you're in, and then technical skills. That's really important as well. This is your founding team, and we understand that sometimes when you're getting investment, that's going to help build out that team, but ultimately we need to know that your team comes to us with that. Okay, our process. Oh, did we skip? Oh, our process. So, I'm not going to go through this all because you can see it pretty simply on here, but a couple of things I want to let you know about. Obviously, we have a very, very thorough process involved in how we assess companies, but it all starts with an application. And one of the things that we are very proud to say, and I believe we do in how we interact with all founders, is we're founder friendly. And that sounds great, but you're like, well, what does that actually mean? Well, if you put an application into us, you will hear within a week whether or not we're going to have you in for a pitch. And we think that's really important, that we get back to you. If you come in and pitch, we will also then get back to you within a week and let you know if that's something we're going to be progressing into due diligence. So for us, it's really important that we're communicating with you. I think one of the other things to be aware of through this process, as Derek mentioned, is on average, for every 100 applications we see, we're probably going to invest in about 2. And that's pretty typical across VC. And you can see that we've had over 200 applications and we've invested in 4. So in that process, if it's not that you're right for Purpose Ventures, you need to get back to that, I'm chasing my life cause, I'm going to go and find money somewhere else. Like, don't think your first no is your reason to stop doing what you're doing. Like, believe in what you're doing and continue with it. Okay, and I'm not going to go into a lot of this because I want to wrap up and make sure we've got time for questions, but essentially, we don't just give money. We are active investors. There's a lot of things. We're hands-on and we'll help in any way we can. So you get our expertise. You also get contact with our global network. We have an incredible playbook, and we've got a community platform that is literally launching in the next week, which is amazing for you from a resources and how you'll connect with each other. And now I'm going to invite Derek up and we're going to have time for questions.
Awesome. Just before we do that, I also wanted to shout out because I realised that in the room, so we've invested in Dave's company Plan Care, and I saw Daniel Dawson up the back, so he's Paperly, and he's also at our founder dinner in a couple of weeks. So Dan's here, and then Nicole from Idea Academy is here. It's actually cool you guys all showed up. So 3 of our 4 companies are actually in the room. So better to ask them questions and ask, quite frankly, about whether you want to take money from us. So, yeah, questions. Sorry, go. Sorry.
Wait, give me a second.
Yeah, we got 10 minutes for questions. So.
Just going back on your last sheet there with your committee and your, sorry, another one back.
Oh, yeah. Yep.
So your investment committee and your term sheet, you mentioned like a 10-year plan, like you're a 10-year growth plan, so I'm guessing 10-year fund, okay.
Yep.
Does that mean you're involved with the company for 10 years? Like in saying, with your term sheet, do you allow the founder to like have a potential buyback? Like what you put in?
Yeah, so a couple of things just on this. Let's unpack that a little bit more. Kylie mentioned that we're founder friendly. The main point of that is we've sat in your shoes before, and the best thing we think we can do is be really honest with you all the way through the process. I used to hate it when you'd raise money, you go and talk to 50 investors and most of them wouldn't tell you what they think and they wouldn't get back to you, and then you get left feeling like, oh, do you want me to hustle and follow up and chase an answer, or do you want me to leave you alone? You just don't know. So quite often we'll tell you in a meeting whether we're interested in investing. And then we make sure the process is as condensed as possible. Our team we'll literally negotiate the terms with you all the way through to our investment committee. We won't offer a formal term sheet until our investment committee signs off on that, but you'll know what the terms of that deal is going to look like. The term sheet is basically, if you go to, it used to be called AVCAL, but it's now the Australian Investment Council. They provide templates. We basically use the AIC template, so you can kind of see what our term sheet's going to look like. There's pretty standard terms. If someone else has got a question, I can go into this, but there are standard terms that venture funds use, so things like anti-dilution rights, liquidation rights, information rights, and that you're just not going to get away from that when you talk to a venture fund. And the 10-year piece, and sort of answering your question, we're a 10-year fund. What that means we've got to do is, in 10 years, find up to 20 companies we're going to invest in, give them money, help them grow, and then exit those companies. So for some of those, we'd expect that we actually exit maybe, like ideally, maybe we get one at year 5 or year 6 and then all the way through. But any company that we haven't exited by year 10, we will have to find a way to get out of the company. Now that can happen lots of ways. So yeah, if the company was going really, really well and somehow the founders got capital and they could buy us out, that's fine. But you've got to keep in mind, we're normally looking for a minimum 10x on our money. So if we've put money, let's say we put $1 million in and valued the company at $10 million, you can give us the money back next week if you like, but we want $10 million back. So you've got to kind of think about that scenario. If you want to do that deal, we're happy for that deal, by the way. So yeah, but we would be on the journey the whole time. And now we're typically, as Kylie said, like to be pretty hands-on. What we mean by that, we're not there day to day, but we've got skills of growing companies and exiting companies over and over. We've got a whole stack of people that are connected to our company that can help, whether it's from accounting, HR, growth, marketing, website development, blah, blah, blah. And we can help bring those people around if you need that type of help. But we definitely would be meeting with you at least once a month and checking in on holding you to account to the things that you said you were going to do. But again, I'd say talk to Dan and Dave and Nicole about that. Like sometimes it feels like you've got this big heavy investor looking over your shoulder, and I'm sure there's parts of that as well. But I think on the whole they'd probably say, yeah, but the accountability and the value that we add actually helps grow the company and keep them on track. So yeah, I hope that answers your question. All right, far away, there's always lots. Yeah.
Western Australia are about 2 to 3, whereas America sometimes will be up to 20. I know that changes from industry to industry. What's would you say the base or the surrounding figure you usually base that multiplier off? Is it purely revenue? Is it EBITDA? Like what kind of figures do VCs look at?
Sure. Just to clarify, I'm not saying at the moment Perth is a 2 and US is a 20. What I'm saying is at the height of the US market, you might have got 20. In WA, that might have been a 6 times multiple. I'm just saying we're not going to pay the US VC multiples comparatively. In terms of how do we work that out, it's actually contextual to your company. So, and again, you might not know that. So you kind of need to come in with a view on what you think the valuation is and how you're justifying that. And then we'll typically, again, being founder friendly, we'll tell you how we've worked out the valuation like as best we can, and you can decide whether you agree with that or not. But to give an example, like a SaaS business, if you've got revenue, like software as a service, you typically find it's a multiple of your ARR. That might be the way it's done. If you're a marketplace, it's typically a multiple of what we'd call your gross market value. So marketplace, typically you might have $1 million transactions go through, but you're only taking a 17% clip or something. So the $1 million, we give you a multiple on that. So again, because we've got access to that data and, we're dealing with other venture funds or we've seen other deals, it's different. If it's, like startups really, we wouldn't necessarily expect you to be profitable. In fact, if you're coming to us as a first check and you are, we're probably thinking you're not investing back into the company fast enough. So EBITDA is an unlikely number that we would value you on. But what we probably are doing is looking at your business and going, we think when you exit, EBITDA is the number that you'll get valued on. So then we'd be helping over 5, 6, 7, 8 years to make sure that we build that story as well. So, yeah. But you can go to PitchBook, Crunchbase, Alternatives PE, like there's a stack of data sources that you can, or Dealroom. They don't always give you the valuation, but there is data around you can get hold of.
Just on that note, I think it's also, as founders, we also have to recognise that the market isn't 2021. So the 20x revenue in that, they just don't exist anymore. You're lucky if you're going to get 6 as a SaaS, I think, in these days. And you've probably got more data to that. But it comes back to, as a founder, when you're looking at it, an investor is looking at you to go, when am I going to make my money down the line? And if you're going to 20x your revenue, then you're going to assume that you're going to get 20x your revenue at an exit point. So again, you've got to be realistic as a founder when it comes to taking that money on.
I think it's interesting.
Sorry?
Unless you're in AI.
Yeah,
well,
AI.
Again, yeah, but is there...
I saw this chart actually only a few months ago, and it talked about the valuation of the metaverse versus AI a year ago, and what that looks like over a year, and they've literally crossed. So now no one wants to put money into the metaverse, but AI, you'll get your big valuation. So.
And I'm sure in 4 years' time there'll be another
There's
thing.
something else, yeah. As Dave said, when you've been in the industry as long as we have, like, you know, when I was around, email was launching. Email was this new thing. We should put money into email. No, real true story. So there's lots of trends.
Question down there.
Good morning.
Hi.
Thank you for that. So I just got a question. So should you find kind of a startup that you think they're good, and the team's got a very good team, but for whatever reason you can't fund them, do you recommend them to other funds, or do you say, oh, talk to these guys, they might be able to, you know, look at your stuff?
Yeah, absolutely. I mean, the venture industry in Australia is very close, and it's this weird thing where you're collaborating, but you're also competing. I think if you were, the more likely scenario from what you're saying is if you think you're venture ready and we don't, we're not going to introduce you to other venture funds because they're just going to say, well, we'll co-invest with you, but if you're not investing, we just won't even look. What we're more likely to do is go, like the two scenarios are probably you're a bit too early for venture, so we put you in touch with, there's some great syndicates around at the moment. So there's the West Tech Syndicate run by Rob Nathan, there's Venture X run by Tracy Clark, there's Perth Angels. That's earlier stage money we'd point you towards. Or sometimes people come to us as a venture fund, but you're probably more, let's call it like an infrastructure play. So you've got buildings or lots of hardware or something like that, which is not a fit for us, and then we might be able to point you in some other directions as well.
Any other questions? Come on, there's got to be loads of questions here.
Normally we get.
Not often you get captive VCs in the room. No more questions? Okay.
Yep. I got one.
Thank you. On this very last point you made, where there's an entrepreneur that comes to you with no planned revenue stream and the only income being at the exit point, or through a merger and acquisition, or through IP. You've made it clear that's not you. Who is it then?
Yeah, so the question, if you didn't hear that, is what if the company had no revenue stream, but what you're doing is hoping to sell on exit, so that might be you've built, like you've got some IP or a patent or something like that. So, look, I think that's probably not us, to be honest. I just have a strong view that ultimately you're trying to solve a problem that a customer is willing to pay you to have that problem solved. And so the only way you can tell that story is by generating revenue. So there are certainly some companies, and it's particularly, like the way to think about it's probably in drug development, I'm not sure what your company is, but, or deeper tech, where you're spending all the money on that research and then you're hoping that the pharmaceutical company might come out and buy that or something. Like if it's in that field, there's funds like Brandon Capital that are probably more suited to that story, but even then they really want to see you on a commercialisation journey. Again, I'm just simple at heart. I just think if a customer loves what you're doing and you're solving that problem, that journey should be revenue generating. So yeah, that wouldn't be a fit for us. Yep.
Do you have a preference between B2B or B2C, and what difference would you look for?
No. As Kylie said, we're industry agnostic, we're technology agnostic. We're looking for innovation. Innovation, it's not just the technology, right? Innovation can be an innovative business model. It could be operational efficiency. It could be customer service. There's all these ways you might innovate. So for us, it doesn't matter whether it's B2B or B2C. The only thing we'd be looking for is what's your experience in selling into that market, because it's very different selling B2B, B2C. The main differences being B2C is usually lower margins, high volume. So if you're a B2C company and you go, hey, we've got 20 people that have bought our product, it's like, that's nothing. Like you need 1 million or something, or 500,000. A company we backed at Better Labs, you know, they were a fintech company. They had 1,500 beta users. They're a B2C. We're like, okay, that's a number that kind of makes sense. It's thinking about high volume, and they grew to, by the way, 150,000 users in the first 12 months. So we're thinking about what does that look like in the B2C market. Likewise, in B2B, it's tend to be higher contract values, but a longer sales cycle. So we're going to want to see that you've not just sold to one customer, maybe not two, but we want to see that you've got the ability to repeat that, and ideally got some sense of, hey, it's a 3-month sales cycle or a 12-month sales cycle or something like that. So again, we'll be thinking about that relative to your business model. Oh yeah, so Kirsty's just saying 50% of the companies we've invested in are B2B and 50% are B2C. Yeah. Yeah,
question here from Jack.
He's not allowed to ask questions.
Just a quick one, actually. Oh, did it turn off? Yeah.
You shout it out and
okay.
I'll say it again.
At the moment, you've just raised a fund, so you're probably not going to like this question, but will you raise another fund at some stage, do you think? Like, I guess it's fit for purpose now, because I guess the volume that we've got coming through the ecosystem, but do you anticipate potentially raising
Yeah, that's a great question. So Jack's saying, do we anticipate to raise another fund? And he thought I wouldn't like that question, but I'm not sure why. It's a good question. So one of the problems in Perth, right, here's the quick spiel. The ESVCLP thing that Kylie mentioned tracks all the venture capital in Australia. There's $5 billion of capital under that regime. Up until our fund, less than 1% of that had ever been invested in WA. So our view is we're 10% of the population, we're 17.5% contributor to GDP. We should have the equivalent amount surely right here. Now, a lot of our risk capital we know goes into mining and property and other sectors, but it's not been good enough that there hasn't been venture capital. That ESVCLP structure has been around for 20 years. We were the first WA company to even apply, let alone get it right. So it's crazy what's been going on here. The last active venture fund was probably UR Capital, which fully exercised their money about 10 years ago. None of the previous venture funds in WA have ever got to Fund 2, and that's problematic. So if you think about the Blackbirds, Airtrees, One Ventures, all the bigger funds, our first fund is actually larger than most of theirs. So we're one of the largest first funds in Australia, but what they've done is then gone on through the track record they've built is gone and raised a $500 million fund or $1 billion fund. So to answer your question, yes, we are fully intending to get to Fund 2. We have to deploy a certain amount of capital and give our investors confidence before we can do that. But it's very likely our cornerstone investor would probably follow us into a second fund. I don't think we need a $500 million fund next, but a $100 million fund is probably where our ecosystem would be at, because even deploying $46 million in the next few years is going to be pretty challenging, to be honest. But there's a lot of eyes watching and hoping we'll get to Fund 2, because that's about ecosystem building. So yeah, that's our plan. Yep.
Brilliant. I think we're at 35 past. We want to give some time for networking. Is there one more question? No? In that case, we'll call it. Go on, mate.
Yeah, righto. I'm persistent.
I know, Curtis.
Yeah, right. All good.
All right. Oh, that's
Drop the mic. So thank you very much, Derek and Kylie and Kirsty and Lachlan, for coming along this morning. Hopefully you found that useful. I know I found it useful.
Well, just one more round of applause for the Purpose Ventures team for coming out and helping us. Thank you very much. So what happens now?
If you want to check out the slides again, go and visit perthvideo.com.au and you'll
/ Morning Startup Perth with hyphens. Yep.
You'll get it. I think we'll see if we can try and send a copy out so at least you can see what's there, because there's a lot of valuable information in it.
Absolutely.
And we've got these guys. So you going to stick around for 20 minutes?
Yep. Cool.
Yeah, okay, cool.
2 weeks' time, we've got the +8.
Yes.
Come and learn about that. How it's going to be awesome. We've got Kirsty back again.
Sorry, Kirsty. I know you're not a morning person, but...
Now we're going to turn this place back into a co-working space just to make the networking more exciting. We'll start throwing furniture at you, so don't be afraid. Help yourself to food. Thanks to Keep Space once again, and see you in 2 weeks.
Thank you very much. Take care.
Cheers.
Battery's going on there. Yeah. All right. Prepare to be swamped.